Welcome to this channel, traders. Today I want us to look at West Texas Intermediate crude oil, okay, WTI, on the 5 minutes time frame. First thing, you will need to trade it during the London session. Let's open our London session there, okay, because in between the London sessions this thing is not doing anything, okay, it is just sleeping. By no chance should you look for a trade between the blue boxes. Let me just scroll back a bit so that you may see. Okay, you see it moves in the blue box and nothing in between. Nothing in between. If you have been following this channel for quite some time, you should know these things by now, that every currency pair has the right session for it to move. You see, it's not moving. In the blue boxes, it moves. You don't just trade any pair anytime just because you are seeing a setup. You also have to check if it is the right time for trading that pair. So you can see that in between the London sessions, it's not going anywhere. During the London session, it moves. Okay, so that one you should know. Okay, so let me just show you the strategy, or before I show you the strategy, there are certain things that you should know about crude oil or about oil. Oil, when it moves, let me show you the secrets. If you are to see oil making an aggressive move, just know that 99.9% of the time it is going to pull back and come back to where it started from. Okay, and all this happens within the London session. That's two pieces of information that you should know now. Whenever crude oil makes an aggressive move, okay, let's say it's selling aggressively, rest assured that when it comes back, if you see it coming back, it is coming back to where the aggressive move started, and all that happens within the London session. That should be easy, guys. That should be easy to understand. So let us just look at that for now. Okay, let's look at this good example right here. It made a spike to the upward direction, and then when it started pulling back, it came down to where this move started. Okay, you see that? Let's take it nice and slow. Nice and slow. You don't rush if you want to learn something. Good things take time. So there was this upward move, and then when the breakout happened, it came back right to where the move started. Okay, there was also this upward move, and then it came back almost to where the move started. Okay, upward move, but then now this one was outside of the London session. Okay, let us just go back a little bit more before I can show you the strategy. Okay, right here on the London session, there was this aggressive move. Okay, and then it started pulling back, and guess what? It ended up coming back to where the move started. There was this aggressive move. When it pulled back, it ended up coming down to where the move started. Okay, easy. This should now be giving you ideas of how you can challenge this thing. Okay, let's see what happened right here. Down aggressive move, and then at the pullback, it came right to where the move started. And there was also this aggressive move. Okay, if you were not sure about this first one, there was this upper aggressive move, and then let me just remove that mess, and then price came down to where the move started. Okay, and then there was this spike, But from here, remember, you are no longer supposed to take trades because you are now falling outside of the London session. Maybe let me just go ahead and show you the strategy, how you can take advantage of this. Of course, now that you have the knowledge, you can come up with your own ways of killing this thing, knowing that it moves during the London session, and whenever it makes a spike into a certain direction, it is definitely going to come back. And let me say this important thing: crude oil needs quite a bigger account, I may say. So if your account is $100 or even less, be smart, traders. Be smart. Don't trade an account that is small like this one. Instead, use the $100 to buy a 3,000 balance live account. Okay, you buy the 3,000 account and then you trade the 3,000 account, not the $100. Why would you trade $100 if there is a chance to purchase or subscribe for a $3,000 account and then you trade this $3,000 account? But of course, if you don't know about how to do this thing, I won't say much about it here. Just watch this video. It is in my channel. I'll put its link in the video description. Very easy. It's what most of my traders are doing and they are making money out of it, and it's what I am also doing. Okay, trading big accounts. Let's proceed. What you're supposed to do is, during the London session, just wait and watch out for a big spike like this one. Okay, of course you might do a little bit of analysis right here. Okay, you do a little bit of analysis and wait for a breakout so that you can catch the buy. That's hard. Okay, I've been trading for a long time. That's hard. We've been trying to do that for the past many years, and we've been failing to do that. So just sit back and relax. Wait for the market to show you the move. Okay, once the market has shown you this spike, aggressive move, what you wait for now is a reversal pattern. Okay, it's a reversal pattern because the first spike is very aggressive. You are likely to make a lot of mistakes right here, but when price comes back, it comes at a slow pace rather than when it takes off. Okay, so what you can do is try to analyze right here for the reversal. Okay, so right here you could see that now price was coming back, and when price was coming back, you would have entered maybe your sell trade somewhere there. Okay, you put your stop loss just above this key level. You put your TP not exactly where the move started. Okay, just put it slightly above to where the move started. Now when this trade takes off, it puts you in profit. You are holding one trade. If it pulls back towards your stop loss, halfway towards your stop loss, place the second trade. Okay, place the second trade. If price is to pull back, this is the trade that is going to pay you the most. Okay, so it is then going to drop and put you in profit. Okay, let me show you this. You see what happened right here. Okay, there was this aggressive move and then price began to come back. So right here would be your point of entry. Now look at this. You know that this upper move began somewhere right here. Your take profit would be right here. And then if you place the trade like this, of course your stop loss would have to be slightly above this first key level, and your profit is, your TP is here. This trade has a bigger stop loss than the take profit, so it's not really wise to take such a trade. If you place a trade and you see that it's like this, small profit, bigger stop loss, it's not a good time to take the trade. But if you see a setup like this one, okay, the aggressive move started here, went up, and right up there you start seeing rejections. Okay, you start seeing rejections, and then you take your trade right here. Okay, you take your trade there. You know that such a trade, you put your stop loss there, you know that such a trade will give you quite some profit. Okay, quite some profit, because it is a 1 to more than 2, 2.7. It's like a 1 to 3. So this is a good trade to take, not the one I showed you before. Those are other things that you should watch out for. So please, traders, go ahead and try this out. Of course, be careful. This oil is somewhat powerful. It's like gold or US 100. If you are new, just start with the currencies, and then you will see these things a bit later on. Okay, so right here you would find your sell trade somewhere there, and it would be a valid trade because it has a tighter stop loss like that. You know that that trade started somewhere there, so it's almost a 1 2 3. You take that. It's as easy as that, traders. You have an aggressive move, you take the trade up there, it gets outside of the London session, you close it, because you are only supposed to trade inside of the blue box. Traders, thank you for watching. I wish you the best as you try this out.